All right, guys, back to work here tonight. Holiday break is behind us. A very happy new year to you all. Hope you guys had a restful break, but it's time to get back to work, right? Got a brand new year, got a brand new month, and a brand new week here. It's Tuesday evening already. We're getting ready for Wednesday's trading session, and we got a lot to cover here tonight in the first video newsletter of a brand new year. As always, we'll pick up right where we left off from December. I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. Before we jump in and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And as always, if you guys enjoy the video tonight, do me a favor, will you? Hit that like button. I appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, right? A little bit late here tonight. Had some data issues on the charts. That's all right, though. First day back. We're going to push right through it. Got a great video in store for you guys here. So where are the best trades setting up for Wednesday's trading session? Boy, everything is bearish right now. We got bear market into a trading range on the S&P. Got a beautiful pop and grind bear market right now on the Emini S&P, and a nice bear move down lower here on the oil. So everything's bearish right now. Lots of bears in control on this. I've got some great short setups I'm watching for tomorrow, and I got a couple reversals that might surprise you for the buyers here, especially over on the oil. So we're going to cover all the best trades for tomorrow here throughout the video here tonight. But before we jump in and talk about all my favorite trades for tomorrow, let's make sure we all get in the same page here. We really have two big news events tomorrow. One, of course, is the ISM manufacturing index at 10 o'clock Eastern time, and of course the FOMC minutes tomorrow afternoon. The ISM manufacturing index is definitely the big news of the morning session, so you'll want to keep that on your radar. And you know, everybody is waiting to hear what the Fed's going to say. We saw them raise rates in December, and now people are thinking, all right, it's about time to start winding down these rate hikes, and everybody is looking forward to seeing what the FOMC meeting minutes will say for tomorrow. Later on this week, we've got that big non-farm payroll number coming on Friday, and these are really the two big news events of the week. Non-farm on Friday, and of course, again, everyone listening in to the Fed right now, will they start to wind down their rate hikes as we go into the brand new year here? For tomorrow, though, two big news events: ISM manufacturing at 10 o'clock, and stick around tomorrow afternoon for the FOMC meeting minutes at 2 o'clock Eastern time. Keep those on your radar for tomorrow. And of course, we'll come back and we'll talk more about the rest of the week's news reports later on in the week here this week. Back to our charts, though, guys. Now, I'm going to cover all my favorite trades on each of these charts here tonight, so make sure you watch all the way to the end, because you will learn different trade ideas, different tactics, and I do try to save the best stuff all the way to the end, so make sure you don't miss the ending of the video here tonight. Let's go right into the S&P first. Let's go S&P. We'll go Nasdaq, and we'll wrap tonight up on the oil, the old black gold there on the crude oil futures. Jumping into the S&P 500, couple things. First of all of these are tick charts here this evening. You'll notice all the specific time frames in the upper left-hand corner. And also be aware, too, the S&P and the NASDAQ, the SPY and the QQQs, they're all pretty similar right now. So everything we talk about on the E-mini can be applied to the NASDAQ and vice versa. So I'll do my best not to repeat myself too badly on this. There are three key insights right now that are kind of tipping us off to where the best trades are going to be on the S&P for tomorrow. First one is a bear bias on the 60-minute chart. I always like to kind of filter my trades or look at these charts through the lens of a higher time frame. A 60-minute time frame is a great time frame to use for that higher time frame. Both the NASDAQ and the S&P quite bearish on that 60-minute chart, and that'll be kind of a lens we're going to look at this through here this evening. We have a bear market into a trading range. This is really the most important factor on this chart, right? It's a bear market into a trading range. Anytime I see a bear market into a trading range, we know that sellers are going to be looking for shorts off resistance levels above the range. And we also know sellers are looking for breakouts going lower. So a lot of the key components we're looking for here for tomorrow are going to be the bears trying to short the pops, and of course the bears shorting those breakouts. So we'll talk a lot about that here as we go deeper into this video here tonight. And of course, the final one here is that support trend line. We definitely have a rising support trend line, and that will certainly be a big part of this here tonight. We'd love to short some bounces here right now, but that trend line is definitely going to be something we'll be talking about here, and that will play into the specific entries that we're going to use here. Now, for the most part, the best place to sell or the best place to trade with a bear market into a trading range is to go up overhead and find some levels up overhead. Find some resistance levels like prior swings. I really like this 38, 70 and a quarter area, kind of the underbelly of that prior range, right? Think of that like a breakout pullback of that trading range. We know that ranges act like magnets. And so oftentimes when we see a breakout into a trading range, we'll pop up, take out the underbelly of that prior range, and ends up right back into that range itself here tomorrow. So really this support trend line is really the only kind of big variable here right now. As we go higher, what I'd like to do is focus on trapping in some of these buyers. You know, we've got a long-term bear bias right now, that range acting as a magnet, and really it's just that trend line there's a little bit of a concern here for us. So imagine now we pop up going higher, we run into overhead resistance. I can get rid of that channel here for now. I love how that channel off that low, up off that high. I really like, for the most part, this whole area up here between that 60 level and that 70 and a quarter area. You know, here are kind of three ideas here of shorting off this pullback right now. We get that pullback going higher, or that bounce above the top of that trading range. I'd love to get these buyers to come in, try a couple times, and then get a chance to use their stops as fuel. So imagine, again, bear market into a trading range. We pop up. Let's get some of these buyers here trying to buy this a couple times and think about where their stops are. And we can use what I call a two-try failure pattern to short this thing. Remember, that trend line is an issue, right? So I want to see it go up, give myself some open space to work with here, and then look for that short back down into that trading range. Think of it again, the range below us is the magnet, level of resistance up overhead, trapping those buyers, use their stops as fuel. Now, one of my favorite follow-up trades on these is as it goes lower, think about finding a new channel by drawing off the lows, go low to low, bring it up around that high, and then look left, find that prior swing, and think about that trap entry for that short. This would really be a great short for us using resistance above that trading range. And really the objective, right, is to go back down and retest these lows at that 38.14 half. We're looking for a two-try failure, and then really any of the entry patterns you guys are learning in our free trading course. It could be a buyer failure, it could be a bull trap like I'm showing on this one, it could be a pullback combination. Again, any of the entry setups and patterns I teach in that free trading course. Now, we also see a lot of V-tops in these bear markets right now. So here's another idea as we go higher. Let's say, for example, we pop up, but we don't get the buyers trying once, the buyers trying twice and back down. A lot of times right now, we'll pop up and there'll be so many bears up there, we'll get a V-top. V-tops are a little bit tricky. What you want to do is as it V-tops, look for the grind as it goes lower. That grind is a dead giveaway. Mark a trend line off that low, bring it up around that high, and then as I always say in the free trading classes, right, look left, find those prior swings, and you want that, what do we always say? You want that first test is the best test off the high of that channel, right? Makes sense? We may not get a good signal as the market goes higher. So if it goes up and V-tops and kind of grinds back down like that, find that new channel, and then don't miss that bull trap or that buyer failure or that pullback combination. possibly a strength move going lower. Again, these are all the same setups you guys are learning in the free trading course, which reminds me, I know that most of you guys have taken the free classes. You've learned all the setups, all the entry techniques, how to find the ranges, how to find the channels. But listen, if you're one of the few people who haven't taken that free trading course, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link, take the free trading course, because the strategy that I teach in that free class will show you a remarkably simple trick to know where the best winning trades will be each day. And I'll teach you 4 entry patterns to help kickstart you making money with that 3-step strategy. If you're missing the best trades right now, if you're taking too many losses, take that free trading course. It's perfect for someone trying to make the jump into full-time trading. And I've got hundreds of examples of pop up, buyers once, buyers twice, and that failure into that hidden channel, and then grab that short from there. So keep an eye on that. And again, grab that link popped up there. I'll also put all of the links you guys need down the description of the YouTube video. Here's one more thing you want to keep in mind. If we go higher, a lot of times we're seeing these really big moves here overnight. Let's say the market really rips higher here overnight. We still have an overall bear bias, right? We're still overall bearish, and I would like to get some shorts still going. But if it really rips higher here overnight, remember, anytime we see a strong move in one direction, we have to anticipate buyers will come in and try to retest the high. Whenever I see a strong kind of push against this momentum right now, think about a crown reversal. As we pull back here now, it's the same idea of a 2-try failure, but think of now buyers trying once, buyers trying twice. I call these crown reversals. You'll learn a lot more about these in that free trading class. But imagine now, right, we really blast up in Asia, right? We really get a strong breakout overnight. That overall bear bias tells me let's not get caught chasing this thing up into those highs overhead. Let's trap in those buyers and then use those bull traps, right? That little trap high, I call these crown reversals. Another scenario we see quite a bit is if it really jumps up going higher, the buyers may come in and they may hold that pullback. They may pull back and retest that high. As we always say, anytime we see a strong move, expect that pullback, that retest. Once they get that retest, now the fun starts. Now trapping those rookies. Let them try once, let them try twice. Think about now with those buyers trapped in at resistance in an overall bear market, where are their stops? Where is their pain? This is where the fun begins right now, right? 1, 2 for the buyers. Look for that nice strong signal candle closing below the moving average. There's your 2-try failure after they retest. And then don't forget, right, as it starts to roll lower here, this is where the real fun starts now. Find that new channel by drawing off the lows. Find that channel off the highs. Look left. Find that prior swing. And again, could be a bull trap. Could be a buyer failure. That's where the money is as we go higher here. And also, too, remember, it could easily go running up and then V-top, grind back down. Same thing, right? Same thing. V-top, grind back down. Same scenario that we talked about here before. Now, I'm sure by now you're wondering, at what point can we buy this thing as it goes higher? I'm going to talk about buying it off the low here in a second. Don't you worry. I'm saving the good stuff here for later on in the video. We definitely have potential for some reversals here. But as the market goes higher, you got to remember, we got that long-term bear bias right now. So again, I don't want to get caught trying to buy that pullback. If the buyers can actually pull back, hold the moving average, this is the 21 moving average, is this yellow line on the chart right now. If they can run up, hold that pullback, and really blast going higher, that's going to give us a 1, 2, 3 reversal. Now be careful here, because if it only does something like this, if it only runs 1, 2, 3 pop up like that, we're still looking for that crown reversal right back down again. But if they can take out some of those highs up here, if they can hold this pullback, again, doesn't seem very likely right now, but we have to make sure we're ready for everything, right? It makes no sense to predict the market market, we want to make sure we anticipate if in these different scenarios that we have a game plan to make money no matter what happens. If they run higher, if they pull back and really rip, right, and really jump off that moving average, taking off all those highs, it's pretty simple at that point. Mark off that high, find that new hidden channel, and again, as always, drill down, look left, and I want that first test off the low of that channel, right? Be careful though, be careful, because buying that pullback is not looking like a very reliable trade with an overall bear bias and big levels of resistance up overhead. So the buyers really have to prove to us as they go higher, they really have to hold that pullback and really get a strong blast going higher. Then we have a complete reversal and we can now start digging in for bear traps, seller failures, right, bullish pullbacks, right, off the moving average, off the low of that channel. What do you think? Any questions on this? Any different ideas? Let me know in the comment section below. I'd love to know what you're thinking as the market goes higher as well. Now, the big question, of course, is, in everyone's mind, what if we go lower? Can I sell it as we go lower? Can I buy it off the low? What if we break out running lower here? That's a great question. Why don't we grab a look at the NASDAQ? Because again, the NASDAQ and the S&P are very similar. So let's go grab the NASDAQ here. The NASDAQ is a little bit different, but for the most part, it's pretty much the same basic idea here right now. We do have that 60-minute bear bias. Again, look at an hour chart, 60-minute chart, a 4-hour chart, and you'll easily see, right? It's very difficult to call this a bull market here right now. The bears, of course, definitely have control of this market. You'll notice that kind of pop and that grind running down here right now, and that gives us, right, that nice bear channel. And you'll notice right now we're right at that area right now. Great spot here for a short. It's too bad that pullback happened so late in the afternoon here this afternoon, so we'll wait and see how the market opens up. But we definitely do have some potential shorts as we're going lower here, along with all of the same setups that we talked about on the S&P. And then again, of course, that same support trend line is going to be a concern here. So I'm not going to go over all the shorts as we go higher. It's the same game plan here on the NASDAQ. What I would do though is look for the move going lower here. So how do we short this thing? Because again, anytime we see a strong move in one direction, we're expecting what? A retest of that low. So how do we short this thing if we're right around those lows right now? I want to look for a bull trap, right? That's the key. Whenever we're trying to sell relatively low, you want to use a bull trap on this. And a bull trap is really simple. Let those buyers try here, pull it back, and look for that trap entry. Now, when it comes to trap entries, as we talk about in the free trading course, you really got to make sure you get above that prior swing and a really nice, strong signal candle for that move back down. I want that trap entry before we get back up to back down to retest the low. Okay, that is mandatory. I don't want to sell this thing after we retest the low until we see a breakout going lower. We'll talk about that more here in a moment. And again, the same idea here will work on the S&P, right? So S&P and NASDAQ are very similar. Now, as we go lower, right? As we go lower, how can I trade some breakouts? Well, remember, one of my favorite breakouts is a failed breakout. So how do we trade a failed breakout on this? We retest the low. Remember, strong move down, they want to retest the low. Same thing in the S&P, right? This will also apply to the S&P. Now, we have an overall bear bias right now. So I have to be very careful trying to pick bottoms on a market like this. Now, as we go lower, we talk about that trap, right? That bull trap, that trap high level, that's pretty simple. As we go back down, this is where those crown reversals are going to be your best friend. And again, what's a crown reversal? They look like this, right? We pull back, the bears try once, the bears try twice. This is that same crown reversal pattern that I talked about up here on the S&P, right? We go up, buyers once, buyers twice. See how I draw that for the short side, right? It's just buyers once, buyers twice, and that trap high. That's the same pattern, but flipped, right? For a bullish setup here. Same idea. We take out that low. Now, think about who is selling down here. The rookies, right? The inexperienced traders who don't quite know yet how to read a chart. Inexperienced traders, rookie traders using small, tight stops, right? And it will oftentimes backfire. Again, we're overall bearish, so don't force this reversal, but let those bears try once. Let them try twice, and you want that trap low here for that crown reversal. Why do you want that trap low? Because we're overall bearish. I want to buy as low as I can. Oftentimes what happens is you'll get these crown reversals. They'll give you some money out of it. Once they get back above that high, though, you'll see it crash back down again. Remember, it's an overall bear market, right? I don't want to buy it as it's going higher. One of the most important lessons you can learn as a trader, and this goes against our instincts, is you ultimately want to buy as we're going lower, right? Or sell as we're going higher. So I don't want to get caught buying it as it goes higher here. I want to buy it as low as possible. That way, if we do get clobbered at that high, because of the overall bear bias, at least I've got a first target. My stop can get moved up to my point of entry. I can remove all the risk and lock in a nice easy reward. The target, of course, on this will be taking out these highs. And then think about this, right? Think about now, this could easily become one big trading range. And then we talked about this in the S&P, right? What do we do with a bear market into a range? We can grab that crown reversal, and then what? We go up, overall bear market, get those buyers coming in, get those buyers to take the bait, right? Get those buyers there to foolishly buy that first pullback, and you got their stops just waiting to get hit for a buyer failure. So think about this sequence, right? Think about this sequence, right? It's that bull trap going lower. It's that crown reversal off the low. Remember, you want that trap low. You want to buy that trap low. And then as we go higher, take some profit off at that high, and then see if these buyers will walk into it and see if we can get those stops to get run and run back down into that trading range, right? So we're going to keep an eye on that. That's one of my favorite trades as we go lower. And then there's a couple more breakout patterns. I'm not going to go over all the different breakout variations that we use in our trade room, but the two most common breakout patterns going lower that you'll want to look for is a 1, 2, 3 breakout and a pop and grind breakout. Like, I love a pop and grind breakout, right? They take out that low. They don't fail and go back up, right? They pop and they begin to grind down like this. Anytime we see that thing pop down and grind down, mark off that low, bring it up around that high. It's an overall bear market. Anytime we see a strong move in one direction, we know the bears want to retest that low. So what do? We find our channel. We mark up those prior swings, right? Above prior swings are where traps live. Above the 21 moving average is where buyers will come in, try to get long. That's where failures live. And then once we get back below the 21 EMA, as long as we haven't retested that low yet, grab that first pullback. These failure into pullback combinations are very, very common. So watch that pop and that grind going lower. That'll be an easy way to short this thing as we're going lower. And then one of the easiest breakout patterns you can use here is a 1, 2, 3 breakout. 1, 2, 3 breakouts are pretty simple. We take out the low, because again, that's the objective, right? Strong move down, they want to take out that low. We take out the low, we pull back to our moving average, and the market blasts off the 21 EMA. Remember, we're not going to try to sell that little pullback right there, right? Not a very reliable place to be shorting, because you're shorting right into the objective, right? The objective is to retest that low in this scenario. But if they can hold that pullback and see some strength jumping through that low and jumping off that 21 EMA, we can now mark off that low. We can now mark off that high, right? We can look left, find some prior swings. Obviously, I'm simply illustrating this here tonight, right? We'll see what we get here for tomorrow. But again, give me a bull trap, give me a buyer failure, right? Give me a pullback combination. One thing to keep in mind too, on a 1, 2, 3 breakout pattern, if we do see that 1, retest the low, 2, the pullback and the jump off that moving average, we find that channel. We mark off those prior swings and we grab that first test, right? That's kind of the easy part. Where's the objective now? Where's the next target as we're going lower? The target is first leg and third leg. Okay, this is pretty consistent across pretty much every type of breakout pattern that we use in our trade room. The first leg and the third leg, and again, this will also apply to that pop and grind channel that we mentioned earlier. This also applies to the S&P 500 as well. But if I can get that 1-2 jump going lower, get that short, whether it be a bull trap or a buyer failure pattern, again, all the same stuff you'll learn in the free video classes. I'm going to mark up, take that leg, first leg, combine that there, and that will give me a good idea of where a good target is as we go lower. We got plenty of levels waiting below us there. That 10,596 level comes to mind. We'll talk more about that tomorrow morning in our morning trade room. But looking good there on the move back down into that and those breakout patterns. What do you think? Right? What do you think? I would love to know your feedback on the Nasdaq. Hit me up in the comment section below. We've covered, I think, now all the best setups going higher and, of course, going lower here right now. Why don't we wrap things up here tonight with the crude oil, the USO, the black gold, the Texas tea. Oil is at first glance, oil's a pretty straightforward market, right? The bears have this beautiful kind of pop and grind move going down. As always, we draw that trend line off that low, up around that high. And as I've said many times, I'd love to short that first pullback. That's a pretty easy game plan here right now. Relatively strong move down. What makes this a little bit more difficult is we don't have as convincing of a directional bias on the oil right now. Look at a 60-minute chart right now, and you'll see a nice big bull run into a trading range, and we're pretty much sitting right on the low of that range. That's why I say we're a bit of a mixed bias here right now. We definitely have a 4-hour, a daily chart on the oil that looks very bearish right now, but that 60-minute time frame, which makes for a really good directional filter, is a little bit more bullish than we'd like it to be. So a little bit more of a mixed bias. We also can see here too, we're sitting right at these major lows. Again, think about a 60-minute chart, right? On a 60-minute chart, you've got this thing pumping up. There's your trading range, and we're right at the low of that range. Not a real easy place to sell short, right? It really isn't an easy place to want to sell short. Again, we're definitely bearish in the short term, but this is why I say, right, at first glance, this looks like a pretty much a slam dunk here for the oil sellers here right now, but not exactly as easy when you kind of put this in perspective of the bigger picture context that we're in here right now. And believe it or not, a lot of this game plan is still going to be very, very similar. For example, I would love to short the top of this channel, right? Get above some of these prior swings. Again, get a range overhead. That level right there at 78 makes for a great kind of breakout pullback area. We talked about that earlier on the S&P. The challenge again is that mixed directional bias and really those major lows. So what do we do in a scenario where we're anticipating this market could easily rip and run higher? What we got to do is if I want to sell short right now, I need to trap in some of these buyers, right? So as we go higher here, I want to see these buyers. These buyers do not need a lot of effort to pop this thing running higher. So let them try once, let them try twice. Ideally, kind of the perfect scenario would be we go up, the buyers come in, they try once, pull back, try twice with that crown reversal. I mean, that would be the kind of the dream scenario for the sellers here right now. Get that little bull trap. That way they've got the buyers all locked in. Their stops are just waiting there to get lit up like a Christmas tree. And of course, we can go back down to retest the low because we have that strong move going down. They're going to want to retest the low. It's just that major support level and that mixed directional bias. What I'd love to do though is at the very bare minimum though, is get these buyers trying at least twice. I like to use the 2-try rule for these whenever I'm not quite convinced of location or direction to really get even more stops down here. Because if you're a buyer and you get stopped out, what happens, right? You become a seller. So in this area, we can get the buyers being forced to sell out of their positions. The sellers, of course, are trying to short the top of that channel. So I like that. I like that 2-try failure, possibly a crown reversal for that run back down to retest a low. I could also see, too, that V-top, right? I could also see, too, popping up. Markets are wild these days. Let's say it pops up. We don't get that 1-2 back down again. Right, we get that kind of V-top, right? So it pops up, it runs back down, and begins to basically grind down as we go. We know where it wants to go. It's just very difficult to short that pop because it oftentimes is quite aggressive, right? So we're not trying to pick a top on this. We're trying to trap those buyers in and use the stops as fuel. If I can grab that new channel, this would make for a relatively easy short, right, off that high. And again, I'm keeping it simple right now. You'll learn these specific entry tactics I use in the trade room in that free trading course, which again is linked up in the upper right-hand corner. You can also, of course, grab all the important links down in the description of this video. Now, here's where the oil could be a little bit different than the S&P and the Nasdaq. Because of that mixed bias, because of these major lows, and because of this range right in the middle, it wouldn't be very difficult, let's say, for the buyers to pop this up, to hold the pullback off the 21, and then really get a strong jump going higher. Now, if they get that reversal, right? Remember, we call these 1, 2, 3 reversals. 1, 2, 3 breakout, 1, 2, 3 reversal. If I can get these bears really pushing it higher on strength, now we pretty much know where they want to go, right? They'll want to take the amount below the range, project that above the range, which pretty much puts us right back around that, 81 half level and change here. So if we can get that 1, 2, 3, and remember, it really has to jump off that moving average, then we can go out, find that new trend line, find that channel now off the low, and again, get underneath prior swings. Those are my favorite levels, but I'll use any of the entry patterns, right? Traps, failure patterns, pullback setups off of that. And again, we know where the market wants to go at that point, right? It wants to take out that high. What I could definitely anticipate on this is that we may get that 1, 2, 3 reversal, get that long off the low, and then look for, what was it again? The crown reversal, right? The 1 try for the buyers, the 2 try for the buyers, get that crown reversal and short this thing right back down again, right? Imagine for a moment, and again, right? Again, we want to anticipate these different scenarios. That way we can make money no matter what happens tomorrow. It's much more effective, much more profitable than simply making predictions, right? You make a prediction, there's only one way to make money. If you anticipate, we go up, we go down, we go sideways, now you've got your, well, what do we always say? We plan our trades and we trade our plan. So we rip higher, we get that strong run higher now, we take out these highs. Now again, we talked about this earlier, right? Strong moves, they have to be respected. So in these scenarios, it'll either be a 1, a 2 with a crown reversal for the short back down, right? It could obviously be a V-top into a grinder going down as well. That would be fine as well. Or it may pull back. They retest that high. What do we always say? Mission accomplished, right? Anytime we see a strong move like this. And again, this could easily be that channel. We get that long off of the low. They retest that high. And then once they retest, it's buyers once, it's buyers twice. These are rookies buying up here, right? Professionals are not buying at that high, right? They're buying pullbacks on the way up to retest the high. Once those buyers commit once, twice, where are their stops? We can now short right into those stop losses. And again, don't forget, my favorite sequence on these is that 2-try failure. And then as we roll over, remember, ranges act like magnets. We mark off that new trend line, we find that new channel, and you got it. Drill down, grab that first test off the high of this channel, right? So again, this could easily 1, 2, 3, grab that channel, get that long, right, going out the channel here. We take out those highs. The buyers come in, they retest, or they crown reversal and look for that short back down again. All right, guys, so keep it in mind as we go higher. We may also go sideways down here. And we already know now what a bear market with trading range looks like, right? So if it goes sideways here overnight, what happens now? If it goes sideways, the same exact game plan. We go up, we trap in these buyers, we use their stops, because now that range, of course, will act like a magnet, right? Same game plan we talked about on the S&P, because the S&P is a bear market into a trading range. So if it goes sideways here, not a lot changes. In fact, if it goes sideways, it's even better for the sellers because, of course, ranges become magnets. What if we go lower here? If we keep on grinding lower, this really, of course, is a good thing for the bears, right? We're going to keep that trend line coming down. We'll keep that channel going lower. Pretty simple, right? If it keeps on grinding down, keep updating your charts with those prior swings. Wait for that pop up, get that bull trap above prior swings, get those buyers to come in, and once, twice, again, we're still around those major lows, right? So trap in those buyers and use those stops as fuel for that failure into pullback combination, right? So keep an eye on this thing as we go lower. We may also, of course, see something like this where we pop up, buyers once, buyers twice, we take out that low, we then pull back to the moving average, 1, 2, 3, break down, right? Remember, we're not going to sell that first pullback, right? We'll sell high, we don't sell low, but if they can hold that pullback and 1, 2 blast, you got it. That's your 1, 2, 3 breakout. Mark that low, mark that high, and don't miss that first test off the high there. And as always, right? First leg, third leg, right? That'll give you some objectives as we go lower here. Next big levels below us is 73.40 there on the oil. So keep an eye out if we do keep on grinding lower. If we keep on grinding lower, just keep on shorting those pops here. But again, oil is definitely the market here tonight that has, well, from what we know right now, definitely has more potential for that bullish reversal. And you guys have a game plan to make some money on that. All right, guys, what do you think, right? Am I crazy to want to sell the oil right now? What do you think? I would love to know your feedback as well. Hit me up in the comment section. I always appreciate you guys chiming in and sharing your opinion on these markets. Well, wrapping up the video here for tonight, it feels great to be back here with you guys. I know it took me a little bit longer than normal here to get video published here for tonight. It's always a bit messy in your first day back, isn't it? That's all right, though. It is great to rip the Band-Aid off and get back on the horse with you guys here for a brand new year. Now, don't forget, tomorrow morning in the trade room, 8 o'clock Eastern time, if you're tired of missing the best trades right now, what are you waiting for? Come on and join us every morning, 8 a.m. Eastern time. We trade this stuff together. I'll put all the membership links, all the free course links down in the description of the YouTube video. So grab those links, get registered for the free class, get your feet wet there, get the momentum at your back there, and I'll see you in the trade room as a new member here very, very soon. Any questions here? Don't be afraid to drop questions in the comment section. That live chat is always a great way to get help for us here in the office, and the easiest way to get help is to always pick up the phone, give us a call, shoot me an email. We're always here to help out with any questions you might have along the way, whether it be brokers and data or the free trading classes or coming out and joining as a brand new member. All right, guys, so keep in touch on this. Hope you enjoyed the video tonight. Again, thank you so much for your patience. I appreciate you guys sticking around tonight on the video. We'll wrap things up here for now. Have a great rest of your evening. I'll see you tomorrow at 8 o'clock Eastern time in the trade room. If not, we'll see you guys same time, same place here, hopefully quite a bit earlier in tomorrow night's video newsletter. Anyways, guys, once again, a very happy new year to you. As always, my name is Joseph. Be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.